Hello and welcome to the show, Your Real Estate Today. We are so glad that you're spending your Saturday afternoon with us. Happy day to you. And we're about to spend the next hour together talking about my favorite subject, real estate. Hey, it's Paul Jameson, your host, owner of Jameson Realty, Jameson Property Management, and Jameson Property Investments. I have got such a fun, full show for you today. And as you know, you can listen to us anytime on the WBT website, our podcast, or if you like to see all the funny faces, gestures, and other crazy things that we do on an ongoing basis, either between or during the show, you can go to the Jameson Realty YouTube channel and watch us there. Now, as you all know, I've got Sandy Dickinson with Cross Country Mortgage with us today. Hey, Sandy.
Hello.
Glad you're with us. And Sandy, when you see her on YouTube, is sporting a new company logo on her arm. So she's all decked out today.
That's right.
Pretty spiffy. Also coming up, Brenna Heller with the Costner Law Firm. She'll be joining us for the remainder of the show after segment 1, because we've got to get through my weekly what I learned this week and the mortgage update first, but we've got some things to go through. We're going to talk about everything around addendums, and we'll probably throw in some impromptu questions that Brenna will not be prepared for and have to say, that's a really good question, I'm not really sure if I want to answer that one. So, but hey, we've got her here and we're going to take advantage of her great expertise. So glad to have her back. All right. So this is hot off the presses. And I prepared Brenna for this at the break because this is going to blow your mind. All right. I'm going to put this out. TJ's in here also. He's back today. Glad to have my friend TJ back. But I want to tell you that this statistic is going to make you jump up and go hooty hoo if you do that sort of thing. Last February, last February, I was right the first time. There were 8,000 homes on the market. 8,000. I'm rounding down. It was a little over 8,000. And we were upset about how few listings there were and how tight the market was. You remember? Go back to last February's show and listen to me talk about it. This February, Sandy, Brenna, TJ, and TJ's intern, there are 3,000 homes on the market.
Wow.
3,000. Holy guacamole. So, if you're thinking about selling, how about being in the driver's seat? Now, listen, if you're thinking about selling, this is how it should go, right? You want to make sure that you remember the expression, pigs get fat and hogs get slaughtered. However, you want to remember the expression that this is an opportune time where you have a bigger audience for what you have. So if you price it correctly, and not just price it correctly, but you put an experienced agent on it where you get it to the finish line, you're going to make more money on your home this year, period. The statistics around the market center that I'm affiliated with at Keller Williams South Park, we looked at our average kind of pricing numbers and the average listing numbers. It's up like 30%. So bigger houses are coming on, bigger houses are selling, and a lot of good things are happening. So just think about the fact that if you're interested, don't go crazy on the prices. And we did refer in a meeting this morning, Zillow's numbers are not accurate. So if you're looking at that as a reference, don't. The algorithm has not caught up to our market, and it is not correct. So deal with an agent. Call us at 846-3663 and let us help you figure out the real value. You also want to price it so that in competition, the price goes up, not down. You don't want to put such a crazy price on it that you have downward pressure versus upward pressure. You always get more when you do it that way. Also, be careful and cognizant of false promises and disclaimers about doing business. I put an ad out that talks about the fact that we don't have a disclaimer in anything we do. We're not going to pay you if you don't list with us. We're not going to give you a guaranteed offer, which is way below market for your home. We're going to do business the way business should be done. And that's, you're going to hire us because you admire our experience and you trust us to help you with one of the biggest transactions you're ever going to make. All right. The next thing is, in this market, I want to identify for you an opportunity. You know, there are a lot of buyers out there that are trying to get a home under contract, and they're going to the fray of multiple offer, and they're putting their best offer forward. 35 to 40%, and I mentioned this last week, of the deals that go under contract come out of contract. So more than a third of the deals that go under contract are coming back. Be ready for when it comes back. So write a backup offer. You'll be in that first position if it falls out. And if for some reason it doesn't close, you're not out anything. So just want to put that out for you. All right. I was in CE and they asked all the agents, there were 300 agents. They said, what is your favorite social media tool? Well, we got all the answers that you could think of: Twitter and Facebook and blah, blah, and Instagram and this and that and the other. And I wrote a line. Nobody paid attention but me, but that's okay. You want to know what my favorite social media tool is, Sandy?
Yes, I do.
A phone. Picking it up and talking on it.
My favorite too.
Yeah. I'm not doing all that crazy stuff if I can avoid it. So I pick up the phone. I like to talk to people. That's my thing. Or sit face to face with them. There's some social media for you. Yeah, that's right. All right. I just feel like many people are, I'll talk about that next. All right. So anyway, Sandy, let's have a mortgage update, tattooed arm lady.
Okay. Well, like you said before, I'm with Cross Country Mortgage now, formerly Summit Funding. So the whole branch has moved to this company. They have great operations, array of products, lots of jumbo products. They have construction and renovation. It seems like they have a pretty darn good process. So we're excited to be here. And mortgage wise, rates are still trending up. So if you're thinking about buying or selling and buying, then it's a good time to do it because it does look like they're on their way up. Mortgage applications were up a little bit this week, but housing starts are down. And I think a lot of that may have to do with the cost of lumber. So the cost of lumber has really gone up. I guess the Fed is talking about maybe providing up to $15,000 for first-time home buyers. Mm-hmm. We in the mortgage world don't think that's a very good idea. That's not going to help our inventory. We thought a better idea would be to supplement the builder costs because that lumber costs have gotten really, really high. And that might help settle out the prices just a tad, or at least keep them from skyrocketing with all the lack of inventory. But the good news is that those, even though permits are down, building permits are down, those that are authorized to build but haven't started yet are up 36%. So there is going to be a lot of building going on. Yeah. So I think that even though refis have slowed, now they're only 63% of financing right now. It's they're slowing down. Purchases are still great.
That's awesome. And if people want to do a refi or they want to get ready to purchase, how do they get in touch with you?
They call my mobile at 704-577-0144. Still all the same people, all the same numbers.
704-577-0144. Thank you, Sandy Dickinson with Cross Country Mortgage. And we'll talk to you next time. We'll be right back for more with Brenna Heller with the Costner Law Firm, myself, Paul Jameson, the show Your Real Estate Today here on Newstalk 1110 99.3 WBT. Welcome back. The show Your Real Estate Today, as y'all can tell, I'm getting better on the guitar. I've been working on it. And, it's just a thing. So it's all good. I'm here with Brenna Heller with the Costner Law Firm. Hey, Brenna, welcome back.
Hey, Paul. Thanks for having me.
Yeah, so glad that you're with us today. We've got so much to talk about. I just want to finish one thing. One thing, and please provide any of your thoughts on this. I talked earlier in the first segment, and so did Sandy, there's a tremendous amount of opportunities out there right now, selling and investing. Of course, there are some challenges, and the news can obviously get you down, right? But there are some great things happening in our community that politics is not responsible for, even if they do claim it. All right, here they are. Many people are refusing to quit being human beings. Number two, many people refuse to social distance. They will physical distance instead. Number three, God's still in charge every day, all day. Number four, people have money that they have saved, and it's not the money that they've been given by the government, and they want to spend it. And housing and investing is alive and well. People are getting out, and the summer is around the corner, and I love this time of the year. And my favorite and last statement, there's plenty of toilet paper, plenty of paper towels, and lots of bacon. What do you think?
I'm not sure there's anything you didn't cover, to be honest. You hit it all. But I think your first couple of points are spot on. People have taken a step back, reevaluated what matters, and there's a real beauty that comes out of that. I think so too, friend. I really do. All right, so we have decided today to take on addendum, attachments. Call it what a word you want to call it. We've decided, Brennan and I have decided to kind of take that on. And I guess if you would like, I'm going to let you go ahead and slap the hand of certain real estate agents out there right out of the gate. See, you never know exactly what I'm going to say, do you? That we as real estate agents should not be writing addendum attachments. You are exactly right. That's a big no-no, unless, of course, you have a law license. And then, we could talk about it a little bit. But yeah, writing addenda, writing addendums, writing amendments, all of those things are a big no-no and can be considered the unauthorized practice of law.
Right. Now, I did have a good night's sleep last night. I mean, does that count for anything? But I mean, the one thing that they say, the one thing in real estate school that they did say is the buyer and seller, if they choose as parties to the contract, can write them themselves, but the realtor, no. Yeah, I mean, I don't love the idea of buyer and seller doing it either for the same reason. However, that's fine. I would say just make sure you get it in front of the eyes of an attorney. Let an attorney bless it. You're covering all your bases by doing that. Biggest purchase you're going to make in your life. You want to write your own addendum attachment? How about no?
I'm happy for you to take a first stab at it. Send it to me. And then we'll agree somewhere in the middle. Yeah, I did write one time, which was an attachment to a contract that said, that prior to closing, the seller is to, and this was for something I bought, so I'm being clear, the prior to the closing of the contract, the seller is to remove all trash from the trash can. That one I felt safe.
Well, no
Should
comment.
I put an et al at the end of it?
I don't know that I would have tweaked it much had you sent it to me, but technically speaking.
All right, let's talk about, because right now, and you sent this, and I love this that you sent this right now, because of the competition, there is a lot of offers coming in over asking price, and there's a couple of addendums or addenda that you all have drafted for us around the appraisal that I'd love for you to share about.
Yeah, right now what we're seeing, which is the opposite of the original appraisal addendum that we drafted probably a year, maybe plus ago, what we're seeing now is requests for an addendum to the contract that says that the buyer is willing to pay X amount above the appraisal price, and potentially, the list price as well. And the considerations for an addendum like that is just to make sure that the parties are fully informed, understand what that means from a practical standpoint and money coming from your pocket standpoint. And as long as that's happening, there's no reason that you can't do it. So the take that we are taking is we're happy to do it on a case-by-case basis, but we need to talk to the buyer, make sure everybody understands what they're agreeing to and the implications, and then we'll go from there.
Right. That makes absolute perfect sense, because right now the record that I have seen, just personally, was I've seen 40,000 over list price.
Wow. And that has a lot of implications for a buyer, especially if they're getting a loan.
Yeah. Yeah. Now, what made it odd was that they went 40,000 over asking price, but they wanted down payment assistance. So you kind of shake your head on both sides going, they really need a house. They're willing to pay for it, but they don't have enough money to put down the down payment.
Right.
So in this market, my point is that making a strong offer, it not just having a big offer isn't always the one that's going to be accepted. It's the one that's going to take their bigger offer to the closing table, right? And that's what that addenda does, right?
That's exactly right. It just says that we agree to pay this price regardless of anything else that may happen. A low appraisal, a loan amount at the amount of a lower appraisal, we'll come up with the extra money to get it to the closing table.
Right. Another really big form that we're using right now that I see a lot more of, because people are having trouble finding a house when they sell theirs, is the seller possession after closing form. You too?
Yeah, it's been around for a while. It's one of the standard forms. But yeah, you're right. You're seeing it a lot now because these sellers aren't having trouble selling their house. But when they go to tap into the inventory to buy it, it's a whole other scenario. So it's perfectly okay to do a seller possession after closing. Again, just making sure that the parties understand all of the risks. That form is really only meant to be used for a very short-term arrangement and is not meant for any sort of long-term lease arrangement.
Yeah, I think the limitation is like a couple weeks or something.
I believe the old form was had 14 days hard coded, and the new form has a blank. You can fill in the term.
Right.
But yeah, I mean, my recommendation would be to keep it to a couple weeks tops.
Yeah. Right. And then it lays out terms on how the condition is to be, how the utilities are handled, and it has a lot of stopgap measures. And I guess there's also one for buyers, right? So buyer possession prior to closing, when they've got to get out and get into the other house because they're doing the Texas two-step also, even though they haven't closed on their new house, right?
Exactly. Yeah. It's when a buyer, a poor homeless buyer's gotta jump in and get in that property before they actually get to close. So really a lot of the same considerations on that. Really only want to be using it for very short term. Of course, with either of these forms, if the closing doesn't happen, then you've got some hoops to jump through if your tenant isn't willing to get out on their own.
Yes.
So considerations like that. But as you mentioned, this form too has some good stop gaps about insurance and holdover and all those items.
Right. Well, Brenna Heller with the Costner Law Firm is with us for the remainder of the show. I'm also with you, of course, your host, Paul Jameson with the Jameson Companies. We've got a lot more to come to show you real estate today here on News Talk 1110 99.3 WBT. Stay right with us. Welcome back. We're enjoying our Saturday with you on the show, Your Real Estate Today. Paul Jameson, your host here with the Jameson Companies. That's realty, property management, property investments here with the fantastic attorney Brenna Heller with the Costner Law Firm. She's sharing wisdom with us today around using terms and conditions in a contract to satisfy a need, or in some cases, to win a contract that you're trying to purchase a home with. Because as Brenna, as we talked about earlier, price is important, right?
Absolutely.
It truly is, but terms can be more important. So the rule should be as follows, underlying what Brenna's talking about, which is your agent should be calling the listing agent if you're trying to purchase and saying, other than money, what is important to your seller? Do they need certain dates? Do they have a certain day they need to close? Is appraisal a concern? What about due diligence? What are they looking for, right? So again, I think it's important, first of all, as we said previously, if you have some concerns about certain terms, run those terms by Brenna or one of the attorneys at Costner, right?
That's what we're here for.
Absolutely. And Costner has been our primary partner for our clients, and they do a fantastic job. So we're always excited. Brenna's working on a deal for me right now, helping me clarify some language in which the realtor put into their marketing of the property that is a little bit off, and just making sure that we're okay on something that we're looking at purchasing. So, I use them for lots of things, this being one of them. I don't write my own addenda. That's tricky. So, I like a lot of what they do. Brenna, one of the things that I had you all put together for me was called a spice addendum. Now, the things like, bed bug addendums and smoking and drug-free addendums are very common sense, but a spice addendum was quite a new one. I know when Tara got the request from me, she's like, what do you want a spice addendum for? And I'll tell you what happened. The short version of a long story is that we had a brand new townhome that we managed for a client, and the tenant moved in, and the tenant cooked with spices that got saturated into the walls, saturated into the floors, and basically that smell was worse than if they smoked all day, every day in that brand new townhome. Well, we had that spice addendum, and that protected us, and the tenant had to have that whole place remediated. And that spice was curry. Curry is as harmful odor-wise, obviously you eat it, so it's not harmful that way, as smoke. So it protected our owners from having that issue. Bed bugs, of course, is another one that's very, it's less prevalent right now because people are traveling less, but still it's out there, right? So it's a protection thing, right? So those were a couple. Social media addendum was another. People don't typically post on social media when they're happy, So it's kind of it's an interesting thing to make sure that you have some coverage on, right? So anyway, one of the other things that I had to correct this morning, because I used 3 different words for addenda and they're not, is I called it an exhibit, but really it is an addenda. You have some around surveys and survey waivers when people don't get surveys, right?
That's exactly right. We always recommend a survey every time you purchase real property, unless it's a condo, of course, because you can't get a survey on a condo.
Air
But other
survey?
than that, yeah, exactly. Let me know when that technology catches up. It probably will at some point.
Yeah.
Yes. So anytime that a buyer elects not to have a survey, which they're within their rights to do, they're going to sign something called a survey waiver at closing, which just says that they know that they're not going to have any coverage on their title policy for any matters of survey, and that they were, it was suggested to them to get one, and they decided not to.
Yeah, absolutely. One thing that I end up doing sometimes, because a survey for some clients is a burden, is we'll get a survey after the closing and within a certain period of time. And then once that survey is completed, we'll send it over to Costner and they will send it on to the title company and have it as an attachment to the title insurance.
Yeah, and all that's just about timing. If the policy has already been issued and the survey reveals an encroachment or some other sort of title matter, that can be problematic, but you could also possibly get an endorsement from the title insurance company for something like that. So it just depends on timing and what
Right.
you're dealing with. But I think you're right. Getting a survey, before closing is always most recommended, but at some point would be advisable.
Yeah, you never know whose side of the fence your line is on. It's always good
That's
to kind of protect
exactly
that.
right.
Yeah. There are others, how repairs are going to be conducted. We have that as a part of the contract. Personal items, one of the things that I do is I don't typically in the listing include the refrigerator, washer and dryer, or those types of appliances, even if the client doesn't want them. And what we'll do is we'll use those to negotiate with for instead of repairs. If there's a laundry list of minor repairs and we know that the buyer really wants the used refrigerator, we'll trade them those repairs for that fridge. And you can specifically spell out those terms in lieu of repairs in an addenda, right?
Absolutely. Yeah. Our standard North Carolina contract, has provisions and spaces for fixtures, personal items that will convey, things like that. But if it's a decision that's made after the time of the contract, you're exactly right. You can always handle that sort of item in an addenda. And really, within reason, any sort of change you want to make to the contract. We use a standard one. It's pretty robust. It typically covers everybody's needs, but of course there are things that come up, and it's a contract, and like any contract, it can be changed as long as everybody agrees to it.
Yeah, that's exactly right. And in North Carolina, as Brenna and I know, it has to be in writing. Oral agreements are not binding in the real estate world, and everything has to be in writing. And yesterday in CE, they gave an example of a contract, and this will I'm sure ring familiar to you, that there was an offer written, and the offer, the seller made a counter offer back to the buyer, and there was a small change. They decided to change the due diligence money from $2,000 to $3,000. The due diligence money is the non-refundable deposit. So the realtors talked to each other and they agreed to make that change verbally. And so when they made that change, the listing agent drew a line through the 2,000 and wrote 3,000 and had the seller initial it. And in between that time, And the time the buyer had a chance to initial it, a new contract came in. And guess what happened?
It got signed.
The new contract got signed.
Mhm.
Because any change to the contract is considered a counteroffer.
That's right. And until that counteroffer is accepted, you don't have a fully executed and ratified contract.
Correct. And I tell you what, it happens a lot these days. It's kind of like being in the Shark Tank, if you watch that show, be careful, if you wait around to see what another shark is going to do, because you may lose, right? That's a good analogy. I just made that up. The real estate market's kind of like the Shark Tank.
That's exactly right. I think it's a perfect analogy. I bet I'll hear it again.
Yeah, I'll probably use it again and give myself credit for it. We've got a whole lot more in this show to come. So glad you're with us, Brenna from Costner Law. I'm Paul Jameson, your host. Happy Saturday. We've got more to come. The show, Your Real Estate Today. You're on News Talk 1110, 99.3 WBT. Stay with us. Welcome back to the show, Your Real Estate Today. We love radio. We're glad you're with us on this Saturday afternoon. Thank you, Brenna Heller with the Costner Law Firm, for being with me today. I'm Paul Jameson, your host from the Jameson Companies, Realty Property Management and Property Investments. We're enjoying this Saturday, aren't we not, Brenna? What the heck?
I wouldn't want to be anywhere else.
All right. Sounds good. So, in keeping with our theme of contracts, I get asked the question a lot, and I bet you do too. Under what terms can a buyer get their money back?
Yes, we get the question a lot. And there are several options. Of course, number one being if they terminate the contract during due diligence.
Yes.
If that is the case, the buyer gets their earnest money back. They will forfeit the due diligence fee. That's non-refundable at that point, absent a breach on the seller's behalf. But that's the number one guaranteed way for a buyer to get their earnest money back.
Right.
On top of that, if the seller breaches the contract, the buyer is entitled to their earnest money, the due diligence fee to be reimbursed to them, as well as, in most cases, out-of-pocket expenses. That's what the contract says. Of course, what people sometimes do not consider is the contract may say that, but your opposing party may not agree to give you that money back. And if that's the case, you got to go to court to fight for it.
Right. And I do know in some cases, depending on the contract, depending on the extent of dollars, sometimes you run over dollars to pick up dimes, right?
Exactly. I mean, just taking into consideration the filing fees and everything that would be deducted from that potential reimbursement, sometimes it's not worth it.
Yeah, that's right. One I've seen lately, which I haven't seen very often, has been when there is a blatant error or misrepresentation in the property disclosure. For example, let's just say the home has 3 air conditioning systems. Call it 2. I don't care. The number is arbitrary. And that in the disclosure, the seller states that all air conditioning systems and heating systems were replaced in 2010, say, right? But you do your home inspection and there seems to be a discrepancy, and you bring your HVAC tech out there and there seems to be a discrepancy that 2 of them were 10 years old, but one of them was 21 years old. Uh-oh, that's a problem. Because if it is blatantly stated that all systems were replaced, and they're not, that could cause a misrepresentation of the systems or the material systems in the home. You know, if you think your pipes are, if it's reasonable for you to know these things, then there could be a potential claim for that. False advertising in the listing is another. You know, for our conversation purposes, if you say that there's an exterior building that's 1,800 square feet and it turns out to be 250 square feet, that's a misrepresentation. I have had in the past where a home was measured correctly, but by the appraiser, but misrepresented in the listing that it was, 1,500 square feet larger than it really was. And it was a total, even though it was an error and not intentional, that's a misrepresentation that could affect your perception of the value. That's a pretty big deal, right? What about unable to get a clear title? Do you get your money back there?
Yes, you absolutely do. Assuming you're using the standard North Carolina contract, which requires the seller to provide marketable title. So if the seller is not able to provide marketable title, then they are in turn in breach of the contract.
Right. You got to be able to provide title in order to exchange it, right?
That's exactly right.
Yeah. I guess there could be other contingencies that would come up that would cause that, but I think those are probably the biggest ones that I've seen. You?
Yeah, I'd say so too. The North Carolina contract doesn't have any many contingencies built in, but again, that's not to say that you can't create them. Sale contingencies, appraisals, financing, things like that. And if a contingency falls through, then the contract is essentially null and void.
Right. A lot of times, and we've talked, you were talking to me, you'd seen a contract where there was a $10,000 due diligence fee. And, I get asked the question by the seller, well, what happens if the check bounces? Does that mean this contract is null and void? And the answer is right inside the contract below in the first page. But basically what it says, to paraphrase, is it gives the buyer 24 hours, or it'll have one banking day after a written notice to deliver cash, official bank check, wire transfer, or electronic transfer to the payee. It does happen, and it's not usually intentional, we hope, but then at that point the seller would have the right to terminate the contract. Right?
Yep, that's exactly right. So it gives the buyer a banking day to fix their boo-boo. If they can't fix the boo-boo, then seller's probably going to say no thank you.
Yeah. Well, it was interesting yesterday because in your industry and my industry, here comes the area we didn't discuss that I was going to bring up. So, sorry. So I took yesterday the mandatory code of ethics. Your industry has a very strong code of ethics. My industry has a very strong code of ethics. And a part of that is advertising. Your industry has very clear parameters around advertising, and so does ours. And a big portion of that, and especially in real estate, is making sure that people can identify who your agency is and what affiliation that you have with that agency, how to contact that agency, and the fact that the representation that you give on a piece of property is correct. Now, there are things which in real estate terms are called puffing, but they had several examples. It was interesting in the continuing ed where they had two pictures. They had a picture of a house, the real picture, and then they had a picture that was in the MLS where the power lines behind the house had been airbrushed out. Yeah, airbrushed out. I mean, that is true misrepresentation at its finest, right?
Yeah, I'd say so. That's altering the physical nature of the property in some way, I guess.
Yeah. You know, it's so funny because last night we have a large, like a retention pond that does not normally hold water behind our house, but when it rains like it rained yesterday, it fills up. So I said to my wife, I'm like, let's take a picture. We're on a waterfront piece of property because we can see the retention pond is full back there. Now, of course, there's full-grown trees in the middle of it, but you know, see, that would be misrepresentation or AKA puffing. Yes.
That'd be beyond creative, we'll say.
That's true. That's true. Well, if people want to ask questions or get in touch with Costner Law Firm, how do they do it, Brenna?
You can call my direct line at 704-900-1134 anytime.
900-1134, Brenna Heller with the Costner Law Firm. And of course, friends, if you want to sell, buy, or invest in real estate, or have some real estate you'd like to turn into an investment property through our management division, we'd love to talk to you at 846-DONE, 846-3663, or on the web at myjamesonhomes.com. Thank you, Brenna.
Thanks, Paul.
And have a great rest of your Saturday. God bless. We'll talk to you next week. The show, Your Real Estate Today, here on News Talk 1110 99.3 WBT. Take care.